Hey everyone, Mike Minter here with a quick market recap. Trying something a little different here where we release these on Friday going into Saturday to make it a little bit more relevant for your week. Of course, we won't have today's closing information because I'm recording this midday Friday, but nevertheless, I think this will be a good format for you going forward. Markets had a choppy ride, no question there. So stocks were down for 4 straight days because mostly of worries about AI stock valuations and uncertainty around what the Fed will do with interest rates. So tech and AI related names led the decline, and Bitcoin kept sliding from its October peak. Volatility picked up, and even though we saw a rebound in late week, it didn't last, unfortunately. More defensive areas, things like low volatility strategies, consumer staples, utilities, and healthcare, they held up a little bit better, but Treasury yields ended the week a bit lower, and bonds were roughly flat. Let's talk about AI first. So this is kind of the ongoing big story. AI stocks, especially semiconductors and the big cap names, have seen a sharp but contained pullback in November, giving back part of this 6-month rally we've seen. Concerns are pretty straightforward, right? We have fears of this AI bubble, which I've written about, stretched valuations, crowded trades, and questions about how fast all this AI spending will actually show up in earnings. So investors still view AI as transformative, no question. But right now, there's a big gap between huge upfront investments by these firms and kind of this uncertain future revenue. That gap is creating volatility and putting pressure on valuations. The weakness in AI, it didn't stay in its lane, unfortunately. It spilled over into broader risk assets this week. So high yield corporate bond spreads have widened, which tells you that investors are getting a bit nervous about economic growth and default risk. Equity volatility measured by the VIX jumped as well. Crypto has followed the same risk-off pattern, with Bitcoin dropping more than 25% from its October highs and essentially erasing its year-to-date gains. Bottom line, the AI sell-off shook confidence and cooled overall risk appetite across all markets. Big piece of the story is the Fed. Just a month ago, markets had a pretty much fully priced in a rate cut in December, but it's no longer the case since the Fed's mid-October meeting, where Fed Chair Powell said in a December cut wasn't a done deal. Expectations have come down significantly. The minutes from that meeting released this week show a divided Fed. Some officials favor a preemptive cut to guard against this downside risk, while others want to wait for more clarity on inflation. So the market odds of a December cut have now dropped below 40%. And that swing in expectations is weighed on sentiment. And on top of that, we've had this government shutdown, which is now over, but there's these data delays because of the shutdown. So we finally got the September jobs report, and it came in stronger than expected, a lot stronger. So payrolls rose by 119,000 versus a 50,000 estimate. So it's a big gap there. But it wasn't all good news because the unemployment rate ticked up from 4.3% to 4.4%, and the prior month's job growth was revised lower. So it's a mixed picture. The labor market's still growing, but it's gradually cooling. And the problem is that the data is stale. So the labor departments canceled the October jobs report and pushed the November report to December 16th after the Fed's December 9th through 10th meeting. And so that means the Fed won't have the freshest data on hand when it makes this next decision. We did get a brief lift late in the week from one of the AI leaders. So Nvidia reported extremely strong third quarter results. Revenue was up 63% year over year, driven by demand for their AI-related chips going into data centers. Guidance for next quarter was also above expectations, and CEO Jensen Huang described demand as off the charts. So that helped validate the underlying demand story for AI and temporarily eased some valuation worries. Markets bounced on the news, but unfortunately that optimism did not last long, and stocks gave back some of those post-Nvidia gains. So that's kind of it in a nutshell for the week. As always, we're watching all this closely and we're staying focused on long-term fundamentals and diversified portfolios, not just short-term noise. If you have any questions about how this environment will affect your portfolio, please let us know. We're here to help. Thanks, guys. Talk to you soon.